QuickBooks Online 2025, entering the pay bills form, decreasing the accounts payable. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser, searching for that QuickBooks Online test drive, the free sample file that's available to everybody, looking for a result that has Intuit.com and the URL. Intuit being the owner of QuickBooks, that then giving us a little bit more assurance that we're in the right spot. You might have to verify that you're not a robot, then arrive here in the sample company, Craig's Design and Landscaping Services. We're going to open up the major financial statement reports in new tabs as we do every time. But before we do, we want to note that because we're in the sample company file using basically universal credentials to log into it, it won't always save your data. So if you did the prior presentation and you entered some transactions as we did, and then you wait a day and log back in the following day, it might remove those transactions, refreshing the data back to where we were prior to entering that. Therefore, what we want to do is refresh the data every time so that you don't have to do all the presentations in essence at one time in order for the data in the system to match. So we're going to have the prior presentation data entry not be included this time because we refreshed the data. That said, if you log out of your browser and then quickly log back into it because the system has saved your cookies, it might not refresh and therefore still have the data that you entered last time in the system. Therefore, you might want to log in like in incognito mode or in a different browser. And in that format, it won't save the transaction you did last time so that you will basically hopefully match what we have here, the refreshed data, not including the transaction we did last time. Okay, let's go to the reports on the left-hand side. We're in the standard tab. We're going to right-click on that balance sheet and open up in a new tab. Right-click on the profit loss, open up in a new tab. We've got 3 tabs up top. Go into the middle one where the balance sheet is. I'm going to close the hamburger. I'm going to do the same thing on the range as we did last time, covering a 2-year time frame, 01/01/24 to 12/31/25. Then I want to select the drop down and see it in terms of years, run it to refresh it, and that'll give us our 2 years side by side. Let's go to the P&L, profit and loss, tapping to the right, close up the hamburger. Range is the same, 01/01/24, 12/31/25. Selecting the drop down, seeing the years, run it. So this is what I mean. In 2025, we entered data last time. However, that data is not in here. We had like a $75 bill or something for the telephone or something down here. It's been refreshed and has been removed. That might not bother you if it's in there and you're just following along from presentation to presentation, but if you want the data basically to match, we're going to refresh the data every time. All right, let's go back to the first tab and let's select the drop down. So last time we've been looking at the vendors section here. We discussed the idea that the easiest way to pay for things would be simply with the bank feeds using an expense form for an electronic transfer, which is a type of check form, which we'll talk more about in future presentations. But if you're tracking accounts payable and have to do the full accrual process, you're going to have to enter a bill. So last time we discussed the idea that the bill is a data input form when we think about it very specifically. So we're not thinking about it in terms of the general term bill, which could mean something that we bill the client or someone giving us a bill. If we bill the client from QuickBooks terminology format, we invoice the client. And when we get a bill, we might enter it and just pay it, in which case we don't enter the bill form, we enter a check or an expense form. If we enter a bill for QuickBooks, that means that we're increasing accounts payable. That's what a bill form does. Once the bills are in the system, then we're going to have to sort the bills and pay the bills, the game being for accounts payable that we try to pay the bills as late as possible without getting penalized and possibly taking advantage of any cash discounts if they're available to us. Cash discounts being provided by vendors sometimes in order to improve their cash flow game, trying to incentivize us to pay them before the actual due date. So that's the game we're playing to try to increase our cash flow on the accounts payable side of things, a game typically played by larger businesses that have larger transactions, dollar amounts, and more transactions, therefore cash flow being very significant, even when you're talking about a few days between when you pay the transactions. All right, so let's start by basically entering a bill like we did last time so we can track the process. So I'm going to hit the plus button. Let's enter just a generic bill, like the telephone bill, like we did last time, and track it through. So I'm just going to re-enter, in essence, Verizon. I'm going to make a new vendor, Verizon, as we go. So I'm just going to make the new vendor as generically as possible. I'm going to say we entered it on 1/1/25. It's due, let's say, on the 15th once again. And no bill number. I'm not going to add any tags. I'm just going to add the category of telephone. So telephone tab. And so there it is. I'm not going to make it billable or anything. We discussed that last time, but I'm just going to keep it there. What's this going to do? Well, it's a bill form. That means it's not going to decrease the checking account, but rather it's going to be increasing the liability, and the other side is going to go to the expense, which is the telephone bill, remembering that there's always at least two accounts affected because we're using the double entry accounting system. Let's save it and close it. And then let's go to the balance sheet, run the report to refresh it, scroll down to the accounts payable. There's the accounts payable. I'm in 2025. And let's go into, wait a sec, I don't think I entered let's go into it. I didn't enter a dollar amount. That's kind of a problem. It's in there. There it is, but for zero. Let's fix it. Let's put a dollar amount in it. That might be a little bit more fun if we actually had a dollar amount in there. Let's go into it, and let's say the amount is for $75. Okay, let's save and close it. Notice how easy it is to kind of fix something in QuickBooks, but you want to be careful doing that, especially if it's an older transaction that was from a prior period, for example. All right, so let's go back and then let's refresh it again, run the report, and then I'm going to scroll back down. And so now it is different. So if I go back into it again, and then I go into that 75, there we have it. So I'm going to close it out again and then go back up and then go back to my balance sheet. The other side is going to be on the income statement. So if I go to the income statement, run the report, and scroll down. So now we have the expense recorded at the 75. So the next thing that's going to happen is we're going to pay off the accounts payable. So if I go back on over to the balance sheet, the accounts payable went up, and we're going to basically make it go back down by decreasing the checking account with, in essence, a check form. The variations on check forms are an expense form, which is just a check form without a check number, and in this case, the bill payment form, which is just a check form, but the other side is always going to go to accounts payable. Let's mirror this over here in Excel. The reason I do this in Excel, by the way, is just because it's very transparent in Excel. We're not bouncing back and forth between reports. You can see the connection on a two-dimensional sheet instead of a three-dimensional kind of database program. So when we enter the bill, just generically, expense went up. In our case, telephone expense. I'm going to say that's a debit of $75. One account's affected. And then accounts payable, the liability went up by 75. That's a credit. These are debits and credits. If you don't know debits and credits, that's okay. It's still the accounting equation is the general idea. The idea is it's balancing, right? Assets equal liabilities plus equity. This is part of equity. It went up. And then liabilities is going up for the 75. So accounts payable went up, and then the expenses went up. What happened to net income? Net income went down. Income minus expenses. What are we going to do now? We're going to pay it. That means cash is going to go down with, in essence, a check form, but it's going to be a specific check form. And the other side is going to be then going to accounts payable. Notice what's not happening. We don't have any income statement account. We already hit the income statement account when we entered the bill. So now we have to do the other side of the accrual transaction because this is an accrual account rather than a cash-based account. This will be 75. And what's going to happen, I'm going to double click on this one. The 75 is going to go back down to 0. And then cash is going to go down. Let's imagine we had 50,000 cash to start out with and the equity was negative 50,000. So that's the idea. So ultimately, of course, cash goes down and expenses are impacted, just like if we paid for it with a check just to start off with. But we had this intermediary transaction, which helped us out because it recorded the expense closer to the point in time that we actually incurred it. And then we were able to pay for it as late as possible using the tools in QuickBooks in order to sort and pay as late as possible. Let's look at those tools. So if I go back to the first tab, now we're going to say, okay, now I have to sort the bills to see which ones I want to pay. Where do I do that? In what used to be called the vendor center. Now it's the expenses area. And then I'm going to close the hamburger. So in the first tab, I can sort for typically the bills. So these are all the transactions, but I want specifically the bills, right? I want to look at the bills and then look for the ones that have not been paid. And I can sort here by the items that haven't been paid. Here's the Verizon bill. Of course, normally I would typically want to sort by the due date, right? The due date over here. But I could also more likely go to the bills tab because that specifically relates to the bills. And I've got my 3 tabs up top. I want to go into the unpaid items. And then once again, I can filter this. I'm going to look at all the vendors typically, unless I want to sort by particular vendor. Typically, we're going to look at basically all the vendors and then maybe have a date range change here. And then here's all the information on the unpaid bills. By definition, they're not paid because they're in the unpaid tab. So this is most likely where we would go to pay the bills and sort them out and decide which ones we want to pay. But we could also go to the vendors tab and look by vendor for the bills that haven't been paid with our items up top. So this would most likely be where we would go if a particular vendor asked us a question. So in this case, we're not going to go to the bills typically. I'm going to say, well, let me go to your account specifically to see that particular bill. We'll go to the open bills in this case. So now it's sorting all the vendors that have open bills within them. We can go into the Verizon item. And so there we have it. So there's our bill. And once again, I can schedule a payment here. Or mark as paid if it had already been paid. And I can go into that bill if I needed to get more information on it, seeing the account that we posted to, as well as the due date and so on and so forth. And if I attached something to it, like the actual bill that we received, then I would have that attachment down here as well. Let's close that back out because the most likely place we would go to pay the bill is in this bills area. And this is where, if we're in the accounts payable department, where this might be all we do, is basically enter the bills and then try to sort them and pay them as late as possible, holding on to our cash as long as possible due to the time value of money and wanting to maximize our cash flow. So then we can sort these and say, let's sort it by, here's the status that is going to be past due that we have, and then here's the due date. So notice it's sorted by, in essence, due date. I can click here and it'll resort. So I can sort by any of these that I want to. But typically you would think that we'd want to sort it, in essence, by due date and have the ones up top, the oldest ones that are due. Not the oldest ones in terms of when we entered them, but in terms of the due date, when they're going to be due. On the right-hand side, we have the schedule a payment, noting that that's a little bit different than the pay bills form, which we can find up top in this bills area. Also can be found under the plus button, which if this hamburger is closed, you'll note that this plus button is currently right here, and then under vendors and pay bills. But this plus button is one of the things that kind of gets moved around when they change the website. So typically you can always find it if you open up the hamburger, whatever they call this button, it'll typically be here. And then under vendors, you got the pay bills. So what's the difference between the pay bills form and this schedule a payment? So let's go into that. I'm going to close up the hamburger and let's say I go into a schedule of a payment. That takes me, in essence, into a sales page by Intuit being the owner of QuickBooks, basically saying, hey, we might be able to integrate the process, allowing you to automatically schedule the payments and then possibly make the payments automatically with an electronic transfer, which sounds like a bank feed, right? So you might say, well, what's the difference between that and bank feeds? Am I just signing up to bank feeds here? And it might be a little bit different because when we think about bank feeds, we think about our bank that we chose, the financial institution, not being run by QuickBooks. It's not like a QuickBooks or Intuit financial institution. It's its own institution that we're then importing the data from with a connection, allowing the increases and decreases to the checking accounts into our system so that we can use that to help us with our bookkeeping. Whereas we could have a situation where the bank itself is kind of owned by Intuit, the owner of QuickBooks, allowing possibly a little bit more integration for us to schedule the payments within the system and then actually make those payments at the scheduled date. Notice that's a little bit higher of an integration, meaning usually when we have the bank feeds, I don't schedule the payment within QuickBooks in order to make the payment automatically. However, I might be able to schedule the payments with the financial institution and my vendor. In other words, if I'm paying the phone bill, I might be able to say when the phone bill comes to me, I want to electronically make the payment directly out of my checking account automatically, and just make that an automatic payment on the third-party vendor website and my bank. And then it'll come through to my system using the bank feeds, at which point I can record it, right? But here we're saying I'm gonna enter it as a bill and then schedule the payment, which might give me a little bit more leeway to schedule the payment as late as possible according to what's on the bill, and then use the system internally within QuickBooks to make the payment based on the bill payment date, right? That's a little bit different of an integration, and you might need like a QuickBooks bank account or something to set that up. So you can look into setting that up if you wanted to add that added level of integration. Otherwise, you can sort your information here, and then you're typically going to go into the pay bills form, which once again you can find here, which will give you this window. Looks like this. You have a similar kind of layout, similar kind of filters you have up top. You can also find it if I close this out. You can go in there directly once again with the hamburger, the plus button under vendors, and then pay bills. Okay, so notice that this form is just like all the other forms, except that we can actually pay multiple at the same time, right? I can check multiple of these, so I might want to pay like all of the overdue items, which would be, $606. So what would be the transaction if I was to record all of these? Well, it's a pay bill form, which is a type of check form. Therefore, it's going to decrease the checking account by $606.44. The other side is going to be going to then the accounts payable, decreasing the accounts payable by the same amount, but also tracking the subledger, paying each of these different vendors, which means that these are going to have to be recorded with 3 different transactions in essence in the subledgers. So we're making, in essence, 3 different pay bill forms kind of at the same time within this window, because I can't pay all of these 3 vendors with one transaction, whether it be electronic or a check type of transaction. So that's the general idea. So let's say I pay like this one, and then the Verizon one here. And let's say I make the payment on like, I don't know, the 7th. And then I'm going to go down here and say, I'm going to save and close. Let's save and close it. Oh, wait a sec. I didn't pick a payment account. So the payment accounts are going to be the checking account, the savings account. We could also make the payment account a Visa card and Master, meaning a credit card types of accounts. Those are all financial institution accounts. They're basically the same transaction, but a Visa card or credit card, instead of decreasing the asset of a checking account, increases the liability account. All right, then if we have the check numbers that we're going to be entering, if you're physically using the checks, which most people don't do as much these days because it's going to be an electronic transfer, you'd have to buy the actual checks because you still need the physical checks that are printed in essence by the financial institution, put them in the printer, and then start with the check number that's on the first check, and then you can print all the checks, or you can handwrite the checks and still enter them, and then mirror the checks that you're entering in the system here so that you have the check numbers. Because if you're physically sending out the checks, You want to be able to track them so that you can have your bank reconciliation and see if the check cleared or not. A lot of people won't be physically writing checks, so you might not, in essence, have a check number. So I'm going to put in this field just EP for an electronic payment. And then if you're going to print the checks later, if you were printing the checks, you could check that off and then print them basically later so that you could still record the transactions and then print them at a later time so you can keep doing your bookkeeping process. But I'm going to keep it here, and then once again, I'll hit the drop down and say that I'm going to save and close it. And then it's going to record those 3 transactions. Notice what's left here from the unpaid transactions are the ones that I didn't check off. Now that I'm back in the bills, the paid items are now going to show, for example, the Verizon that has now been paid. If I go into the balance sheet, I can refresh, run the report to refresh it. I can go into the accounts payable for 2025. And you'll notice, even though I paid them at one time, it's recording 3 different transactions here. So I'm going to then go in. So I'm going to go into any one of these, and if I go into it, I see the same form, the bill payment form, but I don't see all 3 of them that I checked off at one time. I only see one at a time because they would be representing 3 different transactions, whether they'd be done electronically with a wire transfer or by physical check. So there's going to be our payment. I can close that out. Notice that what I have within the accounts payable, bills go up, and then the bill payment form is going to decrease it. That's all you're going to see in the detail of the accounts payable account. Noting also that this form, they also label it as a check because it is a type of check form. The most generic form of the thing that decreases the cash account is a check. Now, an expense form for QuickBooks just means it's a check without a check number because it's an electronic transfer, and a bill payment form means that it's a check, but it's not going to be a check for anything other than decreasing the accounts payable. Therefore, if I look up the check, like for example, if I go back up top and I go into my cash account, the other side's in the checking account, and I say, let's check that out. Let's check out the checking. So notice I have these check forms. I can't tell what I paid for. Now, the names might tell me, like Verizon, I'm going to say, well, I paid for the telephone bill, obviously. But notice the account over here doesn't say telephone bill. It says accounts payable. So that's why it's useful to say, okay, wait, this is a check that was for a bill payment, which means that if I want to know the account that was impacted, and I can't tell by the name Verizon, I would have to go into this form, or one way I can do is go into it here and then connect to the bill. The bill is the form that tells me where I actually recorded it to, which is the account of telephone expense under the utilities, which I didn't record this time. I recorded it when I entered the bill. All right, let's close this back out. Let's go back up top. So notice that there was no impact on, if I go to the income statement, we still just have the $75 there. That was there when we entered the bill. The actual payment didn't impact the income statement, which means we're on an accrual basis. We impacted the income statement when we entered the bill closer to the time we consumed the expense, as opposed to when we paid the bill, which was at a later point in time. Okay, if I go back to the first tab, we can check this out. If I look at the expenses on the first tab, I can now say the bills. If I filter the bills and I look at the status of open bills, we can see that these are the only ones that are open. If I look at the bills that are that have been paid, we should see the bills that we just paid off now, including the Verizon bill. And I can sort by the pay bill forms if I so choose. And there's the 3 bills that we paid. I can go into the bills area, which is only going to show the bills side of things. And that's where we have the unpaid and the paid. So that moved out of the unpaid to the paid. I can sort by vendor. And I can now look at the open bills, sorting by open bills. I just unopened them. Sorting by this one. So now these are the only 3 that are left. Or I can look at the past 30 days or whatever. And there's our Verizon here with the bill that has recently been paid. If I go into that, imagining Verizon calls us up and says, hey, you haven't paid us or something. I go into here and say, well, it looks like I've paid you because here's the actual bill, and there's the payment. If I go into this particular bill, it says it's been paid. And then, of course, if they still say it hasn't been paid, I go into my actual bank account and say, hey, look, I see the $75 has been cashed. It's going out of my bank account, and therefore you should have been paid with it. It should have gone into your bank accounts. There must be some other side of the transaction that has happened. And that's why it's important, if we use actual physical checks, we have this timing difference. So if there's a timing difference, I would have paid it, but I have the added check of saying, did that check clear the bank? Did it actually go out of my bank account? That's when we do the bank reconciliation, which we'll talk about in a whole nother section or course. All right, so that's the general process with the bills and the pay bills.